The broadcast is now starting. All attendees are in listen-only mode.
Well, good evening, ladies and gentlemen, and thank you for being with us this evening. And it's good morning to those of you in Queensland at the Gold Coast, Australia, and points north. And good afternoon to the rest of Australia and to our friends across the ditch in New Zealand. Great to have you with us today. In fact, wonderful. Albert's with us. He's a tutorial guy. So is Ben. He's a tutorial guy. Colin's with us. David Beecham's with us. I'm going to talk about David as we go along. He's a Kiwi guy. Greg's with us. He's, of course, Gregory Palladini. He's been wonderful to us because he's been sharing his tutorial results and his learnings through the forum, Danielcode forum. It's been quite wonderful. So we're delighted to have Greg with us. And there's another Greg as well, who's also a tutorial guy and a wealth manager. That's Greg from Colorado, who I think is moving to Texas. He might now be Greg from Texas. Great to have you with us, mate, of course. Hank with us down the Hunter Valley. Great to have you with us, my friend. Joe's with us. Jonathan's with us. Jonathan, good to have you with us. We're talking about you guys. Mark L, of course, is the guy who's done a Danielcode tutorial, and he's desperate to start trading full time, but he's such an efficient manager that he keeps getting offered new jobs on terms he can't say no to. So they keep him in harness because he's such an effective operator. Murph, of course, wouldn't be a Danielcode tutorial without Murph, who's a tutorial guy, great guy, good Irishman, of course. And aren't we all? Milton, I see we're losing you, but you've been a terrific supporter of the Danielcode over the years, and I really appreciate your help. Monty, there's a voice from the past. Haven't seen you for a long time. Monty, good to have you back with us. Nathan, of course. Ned, Peter Mack, who's not the short-term trader, but he's a good Danielcode client. Rob H over in New Zealand. Gee, mate, we're getting old. By the time your lovely Prime Minister, the beautiful Jacinta, ever decides we're allowed to travel across the ditch, you and I will be old men. But I guess it's got to stop soon, hasn't it? All this lockdown business. I mean, it's just stupid. Sean's with us as well. Great to have you with us. And yeah, we're lockout. Absolutely lockout in New Zealand. And plenty of you coming in a bit later today. So that's grand having you all. Great. All the stars are here. Matt just arrived. Miles has just arrived. Great to have you with us, guys. Nathan, of course. And Trevor. Good to have you with us, Trevor. And plenty more coming in still. Okay. So, well, we're still living in COVID, guys. And it depends what part of the world you're in as to what's happening. America's taken the most laissez-faire free enterprise view of it. And regrettably, they paid the price for that. The eastern states in Australia, in fact, Hank didn't know COVID made you old. No, you just get old anyway, mate. COVID is just an interruption. The whole of Australia, apart from the West Australia, we're out of lockdown. We've still got restrictions, one form or another. Some states have mask mandates. Others have maximum number of people per square metre, that sort of crowding mandates. And West Australia, I think the Hermit Nation, I think they've been running the longest real lockdown in history, and I mean real lockdown. You can't get in there without doing your mandatory 2 weeks quarantine, and even then I'm not sure you can get in at all. But, you know, it all changes day to day. But they're the ones who are in the heavy lockdown now over here. And, of course, our friends across the ditch, New Zealand, they're in a serious lockdown. And it's been so long since I've been across to see my friends and my wife's family in New Zealand. It's absolutely difficult, I guess, is the kindest way we can put it, but nonetheless. So I hope you're all well, folks. I know a lot of you have had COVID, and you've told me about that, and pretty tough time. So stay well as you can, and I'll continue to try and survive it all myself as well. Okay, so let's get on to the serious money-making business of trading. And today's tutorial, webinar I should say, is called Apples and Oranges and the Entire Bowl of Fruit. And as you'll see, we're going to talk about all of the opportunities in trading which don't always get explored the right way. And it's pretty standard. There's almost everyone who comes to me as a Danielcode client, either at the website or to do a private personal tutorial, they all, well over 90% of them, all have the same approach. I want to trade the S&P and gold. And the S&P in particular is a very, very difficult market to trade because it is exposed to so much commentary. And as I've told a few of my tutorial guys who migrate off to other markets when they've learned about this, is that the more commentary there is on markets, the more it's subject to noise, which lead to more of those horrible little one-day counter trends than we'd like to see. The opportunities in other forms of trading are immense, and I want to take you through some of those today. They're nearly all the Danielcode. There's a few that aren't, but let's move on. So today, I want to start by talking to you about a gentleman in New Zealand called David Beechin. David's a very interesting character. He's a Danielcode member, of course, he trades, I think, with his partner Jonathan, who is also with us today, Jonathan's also his brother-in-law, so they must have a pretty good relationship. But David came to me last year, and his story was that he and Jonathan had been trading, I think mainly Forex. David, if you're here today, you can type in the question column anything that I misrepresent, so I don't lead folks astray. And if you type in the question box, you'll see in there, I'll see what you're saying. Yes, Forex. So David and Jonathan were Forex folks, and they've been trading Forex very seriously, and they trade other people's money, and they're pretty skilled operators. And a few years ago, they were looking for a guru to take them to the next level, and answer questions, give advice, all the things that you need to have done for you. And they came down to a short list. They researched the whole of the net very thoroughly, and they came up with two operators, one of whom was the Danielcode. And they had to make a decision, and unfortunately for them and for us, they chose the other crowd, whoever they were. So we could have had these people with us and the wonderful Danielcode 2 or 3 years ago, but nonetheless, eventually they came to us. And David did a tutorial with Jonathan, and they've moved on from there, as you can see, and they are now operating very successfully. As you can see, they've tripled the account in 3 months. Some then went back a bit to double the account, and they're sitting at 100% in 3 months. Pretty good trading, in fact, outstanding trading. What am I saying? It's wonderful. And in addition to that, David has started trading a leader-follower account with Striker Securities. I recommended Striker Securities, who've been our brokers like forever, and they're wonderful people. and they run a very, very professional leader-follower account, which means that you run your account with Striker, and you can nominate to go into the leader-follower program, which means that folks, if they want to, can copy your trades. They'll automatically take all the trades that you trade. So you can see these guys, they're just new to leader-follower, but they've done very, very well. They're very sensible people. I should have loved to have met them well before now, but as I say, we can't travel to New Zealand, and they can't travel here except in very exceptional circumstances. So we haven't had a chance to get together, but we will as soon as Jacinta decides to withdraw the heavy hand. I'll be over there. It's been a long time, and I have a lot of friends in New Zealand. I lived there for 13 years. And of course, my wife is a Kiwi. A Kiwi is what we call New Zealanders. That's their national bird, the wingless bird. So these chaps are doing very well. As I say, they've now started this leader-follower account with Striker Securities. Now, the account is called JD Capital DC number 1. But I don't want to give you the wrong impression. It has nothing to do with the Danielcode and nothing to do with me, other than David is a student and Jonathan are students of mine and have done the Danielcode tutorial. So they are experts at time trading, which is the big nanny of them all. They're charging fees of $200 a month. And David's given me permission to use his name to tell you about this. So that's simply how this works. You can go to Striker. They're very, very reputable people. And you can follow the account. You can see how they're going. They publish the results all the time. And there are various categories, bigger accounts, smaller accounts, and they look at them over, a month, 3 months, 6 months, what have you, whole of life. And you can follow that. And if you like what David is doing in that account, you can, when you feel comfortable about it all, you can follow his trades. If you do that, you open your account with Striker, and this leader-follower program automatically puts you into all of the trades they take. So Striker are absolutely, as I say, first-class people. I've known them big players over there for 30 years, some of them. They're the most reputable people, very, very highly regarded. John Galwas is the gentleman who founded it all, and his son, William, is now the CEO, and the head of their trading operations is a chap called Dan Neenan, N-E-E-N-A-N. As I say, I've known them all for a long time. They are absolutely first-class people. I couldn't speak more highly about them as the most rigorous, proper, and ethical people that I know in the business. Now, that's not to say there aren't others, but they're the ones I know. So here's a few pen sketches on their website. It's pretty simple to find. It's striker.com, striker.com, and you can see in the bottom left-hand corner, that's John, who's the chairman and advisor to the business. And he's a legend in trading. He's been involved in huge parts of the history of the exchange. He was a CBOT guide, Chicago Board of Trade guide. You might have drawn that inference from the drawing they have on the image they have on their website of CBOT, which is now, of course, merged with CME, Chicago Mercantile Exchange. But John's been involved historically in these exchanges, has been a massive contributor. He's been an advisor to regulators. He's been an industry regulator himself. He's been advisor to the government. Very, very experienced, wonderful guy. And now it's the business is now being run by William, who's the president, and his beautiful wife, Eco, works in the business as well. And Dan is the Vice President of Operations. That's Dan Neenan. Chris, I think I've just spoken to him on the phone once, or maybe twice. But the Galwases and Dan Neenan, I've known them personally for many years. They're absolutely top-class people. If you're looking for a broker, talk to Dan and at Striker. Make sure you tell them you're a Danielcode client, member, guest, whatever, and you'll be sure they'll look after you. So that has been the story of David, and we wish you well, David. As I say, it's not an official Danielcode or even an unofficial Danielcode account. We have no input to it. I'm not a shareholder, lender, borrower, or anything else. I'm simply the teacher, and David and Jonathan have been very, very good students of mine doing the Danielcode tutorial, which, if you're good enough, takes you on as they're now on the brink of commercial success. And I wish you well, guys. And of course, do remember, when you do a Danielcode tutorial with me, my obligation is not to give you 8, 9, 10 programs, whatever it is, hours of trading. My obligation to you is I'll be here to help you, guide you, advise you, bowl up some new ideas to you for as long as you want. And as long as you remain a member of the Danielcode, and as long as the good Lord allows me to sit here and enjoy this magnificent world that we live in. So we're now moving on to another one of my students, and this is Greg Palladini, who's with us today. So welcome to you, Greg. Greg's a very, very good trader, and he was mainly a Forex guy when he came to me, and he joined the Danielcode, I think, in about 2015, and he did his first Danielcode tutorial at Los Angeles in 2016. And last year, he came back to us. He'd been a member all that time, of course, and he did another Danielcode tutorial specifically to learn trading time. Now, trading time signals, and the methods of trading is taught at our Danielcode tutorials. Everything you see in this webinar and all of the other webinars that I've done over the years, we teach you at a Danielcode tutorial. If you want to be a seriously good trader, or you have ideas of making that commercial, you could start with you should at least start with a Danielcode tutorial with me, where I'll teach you about creating and trading time signals, and they are quite extraordinary. So Greg, as I say, very experienced trader, was mainly a Forex guy, and he's now learnt about trading Danielcode time from his tutorial, started last year, still going on. I'll be talking to him next week. In fact, Greg, looking forward to that. And of course, I teach you a complete trading system, which encompasses risk management, asset allocation, all the other disciplines that you need. And Greg has been particularly generous and good-hearted. As I say, he's a very experienced trader. He's a wealth manager, and he's been running his own businesses for a long time. But when he did this latest tutorial with me, he said, I'll be happy to share my observations with all of your members and your guests. And he's been posting the progress that he's been making on Forum, which is our sort of discussion page, if you like. All members and guests have access to that. You have to be a member to post to it, but everyone can read it and enjoy what's happening there. As I say, Greg's a busy man, but he's been incredibly generous, and he's got a real kick out of the Danielcode type signals, because, as he says, they're pretty amazing, even for an old hand. So you can follow his journey on our forum page, and this was one of his early posts. This was August last year, and you can see what he was looking at and doing. And as he says, very impressive results, to say the least. Especially considering that trading Forex during the summer chop made it very difficult to profit in the past. So markets, of course, are suffer with waves of volatility. Trading is either good or fantastic, and by good I mean not so good. They go through the whole range of emotions, which is one of the reasons that I always recommend that you trade more than one market. As I say, most of the folks who come to me, they want to trade gold and the S&P, and I try to talk them into having a broader view of the world. So you can see what Greg's written here about his observations of the Forex market. And a lot of people forget that we actually started back in 2008 when the website first went public. And for the years before that, we actually started primarily a Forex business. And over the years, I personally have morphed more into a futures trader, but I never neglect the Forex. The money in Forex is very, very good. And if you've done the Danielcode tutorial and know how to trade time, then you can say that the returns from Forex are, excuse me, absolutely exceptional. So this is Greg's next post, and you know, to give us the time that it takes him to, you know, put these results together, post it on the website. It's a real ask, and I didn't ask; he offered, which is why I say he's incredibly generous. Very few people would be prepared to do that, and almost none are happy to say you can use my name. And as you can see on forum, Greg signs off his posts with his real name, Greg Palladini. And it's wonderful, Greg. I want you to know how much the clients appreciate this. And it's one thing me saying to members and interested people and guests, these are the sort of results you can aspire to when you do a Danielcode tutorial. It's a totally different kettle of fish when we have someone totally independent and of your experience and your stature being prepared to share your observations with us. It's absolutely wonderful. So Greg says, I've been trading mostly futures as of late. Prefer silver over gold. Very wise, very wise. I'll be providing a Forex update this weekend. I have inquired that, as some have inquired, yeah, we have members and guests on forum, of course, very interested in Greg's observations, and as he says, he'll be providing an update perhaps over the weekend. So let's keep moving here. So Danielcode time signals are created in all markets based on our universal clock. That's basically natural time, but not as you know it. Once you've done a Danielcode tutorial and I explain the mechanics of this to you, you will clap yourself on the forehead and say, I knew that, but sometimes you just need things to be shown in another way. So the Danielcode time cycles are the most natural of all time cycles, but they're not the ones that you're aware of because your thinking has gone at a slightly different tangent to what my thinking was when I started to discover the Danielcode. I guess that started pretty much 30 years ago. Or thereabouts, and it's been a long journey. It's been wonderful. But what's interesting is that folks always want to argue that futures and Forex are different disciplines. And even to the extent, Greg, that one of your colleagues, acquaintances, whatever, that you recommended came and had a look at the website and thought that wanted to argue that futures and Forex are different, and if you're using the same methodology, as I do on all markets, that couldn't possibly be right. But as you can see from our independent observers, it is right. And Forex guys always like to make out that Forex is a totally different discipline. You know, they use different words. They use pips instead of ticks and that sort of thing to try and differentiate it. But with the Danielcode methodology, futures and Forex trade exactly the same as I'm going to show you. So we're still with Greg's story now. And I've put some italics on some of these statements that he's been kind enough to put into forum for us. And the big thing is what he says here. It's been really interesting to see the Danielcode trading strategy more and more as a way to fight back against inflation. And not only as a hedge, but as a wealth building tool, since there will be more hits to your long-term retirement equity bond fund portfolios to come. That's from Greg. And I've argued for 25 years at least that that's the way to go. Stocks traders and investors, I would say almost all, have never even thought about using futures or forex as profit centers. And if they think about leveraged derivatives at all, they think of them only as part of a hedging strategy. So Greg has raised here the concept of derivatives trading as a standalone profit center for your portfolio. And I've been arguing that for 25 years, but to say the ears of the great unwashed are blocked would be the understatement of the decade. Another Greg, and this is you, Colorado/Texas Greg, he had this idea a bit earlier, and I know that he's been setting up his Danielcode trading. He's also a wealth manager. He's been setting up his Danielcode derivatives trading as a profit center. But there are huge cultural institution reasons to reject this argument, which is a mistake, but that's how institutions work. And it's a shame because there's just so much magic in markets, particularly in forex and futures. It's a wonderful opportunity. Take it if you can. And yesterday, Greg put his latest update up on the website for us. Time signals kept on firing away with life-changing profits. A big statement, isn't it, from a guy who's very well established in business and been a very successful trader for a long time. Life-changing profits. Think about that, folks. And he says, while equities take a hit, look what he's been doing, a profit of 38,000 in palladium, and you can read all of that here. He then goes on to say, as I stated a couple of months ago, it's now essential at least hedge your retirement portfolio or possibly make trading FT income. I guess that's FT is full-time. Greg, I wasn't sure what you had your two capital FT for. Yeah, he says, yeah, I got that right, which is wonderful. Make it your full-time income. Be patient. Use wise money management. Position sizing is essential. Learn the Danielcode tutorial, learn how to trade time signals. You're going to see a lot of those today. But don't forget that the Danielcode TO3 and TO3 Plus signals have an element of time in them, and they continue to be quite extraordinary. My italics to all of this stuff, as you can see, guys. So, Greg, thank you so much on behalf not only of myself, but also our members and guests who are benefiting from your knowledge, from your insights, and your wonderful generosity, being prepared to share your observations as you go through your Danielcode tutorial. It's extremely generous of you. Okay, let's have a look at equities, which are causing a whole lot of people a whole lot of concern. Unnecessarily, in my view. There's been no real violence in the equities. The only day of any violence was the big key reversal day at the low, and range is just expanding so much, folks. Be really careful. Make sure you remember what I've told you. Never risk more than the 1.5 times ATR, which is average true range. And you want that average true range over a reasonable period of time. I use 59 days. You can use shorter if you like, but don't go really short. You don't want to be looking at ATR over 7 days and 10 days, because that way you're just reacting too much to the markets. But if you have learned how to trade Danielcode time signals, what's been happening in equities is really straightforward and not a problem at all. So this is, remember, all US equities and Germany's DAX are so highly correlated that a signal in any may be executed in any other, provided the trade is elected. So in other words, if you see a Russell signal and you want to trade that signal in the Dow or the S&P or the Nasdaq, you can. But have a look at this time trading of the Dow. Very straightforward, got whiplashed a little bit around near the tops there, then a nice big push down. It's not huge, it's not magnificent, and you had an opportunity certainly when we got the mad panic on the big key reversal day at the low to get out of that trade using your trailing stop. When the markets go nuts like that, get really excited, you can safely use a trailing stop of 1 or 1.5 times average true range. Okay, so that was the Dow. This is the Nasdaq. Now, these markets all trade exactly the same. With the Danielcode, the time signals, as you can see, pretty much are exactly the same. I haven't bothered putting the money on this. It's quite a lot of money, but this is not. This is just a little withdrawal at the moment. This is a little drawback. There's no real strong emotional selling here. In fact, the most interesting thing this week was Dudley's. He's one of the Fed governors. His statement yesterday that. I think he said something along the lines that the markets got used to the Fed guidance, and we, being the Fed, made it that way. What he's signaling now is that the so-called Fed put, if it's still there, is in a different place, which hasn't really been discovered yet. But certainly the Fed soft talks their real strategy. So you need to be aware of the subtleties of that. But if you know how to trade the Danielcode signals, you don't have to worry about any of that. You're not going to be like a poor bedazzled options trader. I mean, it is extraordinary the amount of research that comes out of options traders. Honestly, you'd go grey and lose your eyesight just reading it. They look at so many things. They're all looking at chicken gizzards, trying to guess if the market going up, is it going down. Don't need to worry about that if you know the Danielcode, folks. You create your signals, you put your orders on, that's it. We've moved on one here. This is the Russell. As you can see, all these markets trade almost exactly the same. We're at a stage now that we're getting whiplashed. I'm out of it. I'm still showing you the signals, but the market's trying to work out now whether it can rally. Excuse me. It's trying to rally, there'll be a fair bit of jaw boning from the Fed and others going forward. But stick to your signals. When the range gets too big, as Greg wisely said, equities getting into a bit of drama with their pullback. Plenty of other options, plenty of other markets, many of them. I mean, we cover 15 Forex pairs and about 16 or 17 futures, for goodness sake. Wonderful markets, and that's the great gift. Here are his words from a wise man. The italics are from me, incidentally. Time signals keep on firing away with life-changing profits while equities take a hit. Good deal, isn't it? He took a profit of 38,000 on his palladium trade. And see what he's gone here again. As I stated a couple of months ago, it's now essential to at least hedge your retirement portfolio or possibly make trading a full-time income effort. It's all there for you folks once you know what you're doing. Okay, and the Danielcode, of course, I teach this stuff. I teach you everything you've ever seen on these webinars. I teach you how to do that at the Danielcode tutorials. Have a look at this. This is the old US T-bond chart. I've been showing you this chart on and off since 2004. And what's really interesting about it is this original Danielcode trading channel, which you can see diagonally across this whole chart. We stopped updating that in about the middle of 2016. I'm going to say July 2016. And so since then, it's been entirely on its own. The only thing that's been putting in tops and bottoms in this market has been the Danielcode extension of the Danielcode trading channel. And you can see the last big high we had there came on one of our time cycles, March 30th last year. And since then, it's been running down. And you can see the red diagonal line, the solid line through the center. That's the median or the mean. And then it has lighter, thinner red lines above and below. And they are extensions of this range, 1 standard deviation up, 2 standard deviations up, and the same to the downside. Minus 1 standard deviation from the mean, minus 2 standard deviations from the mean. And these are not your normal mathematical standard deviations. These are Danielcode standard deviations. And you can see I've been talking for a while about how this market was trying desperately to hold support at the dotted red line, 1 standard deviation below the mean. And it battled that away. This is a 24-day chart, so these are essentially a Danielcode monthly chart, or the equivalent, if you like. So 1, 2, 3, 4, 5, 6, 7, 8, 9 months. It battled away to hold that, and now it's broken decisively below it. It's heading lower. Now remember that interest rates are the inverse of these charts. This chart going down, the price of UST bonds going down, means interest rates going up. And you can see we have a important time cycle right in this month. It may also extend to next month. And you can see this market is battling to find support. And my guess is it doesn't find support until it hits the dotted red line, which has significantly held the low of this market since mid-2016. Be aware of that. Be very aware of that. This is a blow-up of it, so you can just see it a bit more clearly. And you can see the 118 time cycle coming up next month. So it could be this month, could be next month. Remember, all of these time cycles are valid to plus or minus 1 period. And that's because all of the time cycles can start from either a chart high or a closing high, and vice versa, chart low, closing low, if you like. And that's why they are variable by only, or they're valid to plus or minus 1 period only. Keep an eye on that. That's telling the whole story of what's making the market nervous at the moment, which is not so much interest rates going up, although that's what's talked about all the time. It's really about the extraordinary amount of accommodation that the US Fed has been giving markets in general for such a long time. And it's not just the US Fed. I'm not critical only of them, because this is having the same effect and being done by at least all the Western countries. This country, Australia, New Zealand, UK, this general reduction, or at least intent to withdraw some of the absurd liquidity that the Fed has provided. And that's what's making markets nervous. And markets shouldn't be nervous. I mean, it doesn't matter to you as a trader what the Fed does, because the truth about what the market's going to do is encapsulated in the charts. And unlike options traders, who, as I say, must drive themselves grey-haired and blind trying to read all the analysis on it, with the Danielcode, the last completed bar has in it, it tells you everything you need to know to create the optimum orders for your next day's trading. Why do we trade daily charts? Pretty simple. I've traded everything down to a 3-tick chart. I can assure you there's nothing I haven't tried. I've tried long-term trading, short-term trading, all sorts. The reality in my observation is that the most money is made from trading daily charts, and that's why that's so much our emphasis. Have a look at this chart, folks. This is the US dollar index today. And you can see these are the Danielcode, one of the Danielcode members charts, which are on the website for you. And you can see there's a ton of blue lines there, and each one of those is resistance. And, excuse me, as markets move along, they become more and more complicated with all of the new support and resistance via the Danielcode numbers that they create. And it looks scary. You look at that and say, oh my goodness, how many blue lines you got there? Well, you can see how many it went through just in one day. There's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 in one day. And folks tend to look at this and say, I don't know what to make of it. You don't have to think about it or even worry about it. You simply have to train yourself to the fact that markets know and recognize these Danielcode numbers. They will churn through everything, but they will always show you when they've recognized a number. As you can see with today's high, look where it stopped. A matter of ticks from that particular blue line. So it's that blue line that's given you target recognition. And it does that so accurately. It is really quite extraordinary. Today's high, incidentally, is 97.30. Where's our Danielcode blue line that it stopped at? 97.31. One tick. One tick variance. And markets do this all the time with the Danielcode. And the more volatility there is, surprisingly, when all your other support and resistance fail, Danielcode support and resistance just get stronger and more accurate. And it really is quite an amazing journey. And I tell you that all the time. But look at the nice big trade in US dollar index today. This is another one. This is gold. This is COMEX gold. And you can see it's a black line down there, which is the last level of support and resistance for any chart, was at 1791.8. The Danielcode, or the true low today, 1792.79 tick variance. We allow 0.1% variance, not 1%, 0.1%, 1/10 of 1% is the variance we allow. And I've moved on here, but you can see there that's exactly what gold did today. Gold had a big correlated sell today. As Greg pointed out, silver's been much better trading than gold for quite a while, but gold still benefits because gold and silver and Huey, which is an index, you can't trade futures on Huey, you can trade options. But we cover Huey because Huey, which is actually the unhedged unhedged miners index. I think there's 25. I might be wrong. I think there are 25 individual companies in the Huey index, and they are all gold mining companies that do not price hedge their production. And it's an absolutely superb proxy for gold and silver. And of course, the three of them, gold and silver and the Huey, are also highly correlated that a signal in one can be executed in any other. So we had a TO3 plus sell in silver right at the high, which would be Tuesday, I guess. And what we've done here is we've taken the trade in gold, even though the signal came in silver. And you can do that because these markets are so correlated that a signal in one can be executed in any other, provided that the trade is elected. So that was just some of the lovely stuff that happens from looking at this diversification market, the fruit, all the fruit, the oranges and the apples and the whole fish bowl, the whole fruit bowl, a fish bowl as well if you're looking at it. And look what's happening here. I talked to you at our last webinar 2 weeks ago about US dollar and gold abandoning their usual, or it's more than occasion, it's probably often, I would say, inverse correlation. That one goes up, the other goes down. And I said to you 2 weeks ago, US dollar and gold were fighting to re-establish that inverse correlation. And it's certainly very visible today, as you can see. Gold's had another few massive days just to top off the nice rally we've been having, which I think we've got all of in the US dollar. And you can see that gold is now back in that inverse correlation. So dollar up, gold down, and of course vice versa. Interesting stuff, isn't it? This is beans, folks. This is soybeans. A couple of associates here. We have clients who trade soybean oil and soybean meal, and they're a pretty nice little market. Have a look at this soybean chart here. This is on a, I think it was a TO3 sell, and that's soybeans. This is not soybeans. This is something else. This might be, I don't know what, but it's not soybeans. So let me give myself a rap over the knuckles several times. This, in fact, is silver, I think, and I do apologize for that. This is what happens when you're doing things in the middle of the night. Yeah, this is silver. You'll see another chart of this. Soybeans is going up and away pretty nicely. We're having a nice trade in beans. And let me see if I can enlighten you there. Beans at the moment, yeah, we're long with one bar stop and $1,200 or thereabout in beans. So this is actually the silver chart, and you'll see more of what I'm talking about when we catch up to the real silver chart. Look at this, Forex. If you're not trading Forex, you should certainly consider it. We're making an awful lot of money in Forex. And have a look at this. There's your TO3 buy signal. I'll just bring up the exact dates because this is terribly important for you. One of the ways you can enhance your trading of the Danielcode trade signals enormously is being aware of the, not only just the bare fact of the signals, but the technique to trade them. So back there on Tuesday, January the 18th, we had a TO3 buy signal in this market, which was executed the next day, Wednesday the 19th. It then went up. Now, where you've had that signal, I put a line underneath it, and it's 2 ticks below it at 7168. The low of the setup bar that created the TO3 buy signal was 7170. So this is 2 ticks below it. You can use 1 tick if you like, folks. I use 2 ticks because it's just a personal idiosyncrasy, I think is the word. Excuse me. That many, many years ago, I had a run of getting elected by 1 tick, and I got so annoyed. I said I'm going to use a buffer of 2 ticks on futures and 5 ticks on Forex, but you don't actually need 5 ticks now. Historically, you needed that back in the day when the Forex market between different countries and different groups of bank gave you slightly different price results. That's very much been washed away over the years, and this one's a chart's only using a 2 tick buffer. You can use 5 ticks if you like. Doesn't make any difference really. And you can see that the TO3 buy signal failed, and back a long time ago, I guess it's 20 years ago or so now, doing Swot analysis used to be the very much in vogue. Strengths, weakness, opportunities, and threats. And if you were following that methodology at the time, you had to show how your weaknesses could become opportunities. And look, I always thought it was rubbish, but unfortunately I was in a business at the time that I had to read a lot of this stuff and never put much faith in it. But this is the real opportunity to turn uh, weakness into opportunities, because where this trade fails, every Danielcode trade signal is so powerful. It has its election point where it's elected, it has its initial stop loss, and every single signal, I should say, has a failure point. And in this case, the failure point is 2 ticks below the setup bar, which was at 7168. If that is elected, in other words, if the failure is elected, I call it now flip me. I've talked about it as a failure, it's now an opportunity. I call it flip me. It means you're wrong. Market is telling you you're wrong. That was only a 2-bar counter trend, and it's reinforcing the trend has gone back to the downtrend, which it was in before the little counter trend that we've been talking about. And when you get these flip me points, they're actually a signal that the original trend is being re-established, but they are very often also an acceleration of that trend. So think about that at length. I'm thinking about how we can incorporate that in a sensible way into the website. But if you did nothing else except take the failure points, the flip me points, you'd make a fortune. So give that some thought, folks. Right, let's move along, or we're going to run out of time. And this is Euro US dollar, and this one had a TO3 and a blue line sell signal on it, and it's been gracious enough to have gone straight down for us. Euro USD, let me have a look at that. There it is, and that TO3 and blue line sell signal was created from Thursday, January 13th. Now, the blue line signals are our strongest signals, and when they bite, they're usually very, very good. And this one, as you can see, has been quite magnificent, $2,900, simply for knowing your Danielcode trade signals. It was a TO3 and a blue line sell signal, and it certainly performed that way. It's into $2,900 at the close today. Same thing on this issue I talked to you about how accurate these markets are. And when we get volatility, excuse me, and expansions of the range, they simply get more accurate. The low of today's bar is 111,322. Have a look at the chart. 111,333. 11 ticks variance in this market. That's not even a hair, folks. Extraordinary, isn't it? And big money. So remember, all the fruit at once. Forex, equities, interest rates, grains, softs, sugar, cocoa, coffee, very good market coffee. They're all there for you, and you should be open to them. Same thing here. This is dollar CAD, or the loonie, as they call it. TO3 buy signal. 1, 2, 3, 4, 5, 6 days straight up. $1,600 per one standard contract. Amazing stuff. No one is more amazed and thrilled by all of this stuff than I am, folks. And I've been doing this now in one form or another for 30 years or thereabouts. Have a look at this. This is the dollar-yen pair. Look how this has just turned on all of these Danielcode signals. Starts off with a TO3 and a blue line sell signal. Runs down into a TO3 buy signal. Runs up into a TO3 plus sell signal. Runs down into a key reversal bar, which was the day before the key reversal bar then became the TO3 buy signal. And up it's gone straight $1,100. I mean, you're talking about simple 2 weeks of trading here. 1,000 there, 2,600, $3,000 simply for following the Danielcode TO3 and plus signals. Great reward for you that are doing it, and it continues to be. Have a look at this. This is silver. This is the chart that I have inadvertently put in as soybeans. I probably got so excited about this chart I put it in twice. But if you have a look at it, here we are. That's one of the markets that we follow very closely. And these charts are all published on the Danielcode website. It started off at the top there with a DC time sell, and the next day was a TO3 plus sell, both of them. $7,300 straight down, 1, 2, 3, 4 days. If you've done your Danielcode tutorial, learn how to trade time, this trade would have paid your fee entirely, in full. Wonderful, isn't it? And as Greg points out, silver has been a very much better market than gold of late. But they are completely interchangeable because they're so highly correlated. You could see, as I showed you earlier, that we took the trade, the TO3 plus trade in silver and traded in gold. All right, we are. So volatility, yes, volatility in the US dollars really putting some juice into this, and particularly into the Forex, and the volatility in the major equities. These markets are just setting up with terrific movement and scope in them. So the time trading exceeds everything. So stick with that time trading signal, just I've taught you. Or if you haven't been taught, you're most welcome. Get in touch with me. I'll be happy to teach you everything that you see me do at these tutorials. Look at refining your trading on the TO3 and TO3 plus signals by being aware of the correlations and being aware of the flip me. Turn the failure into an opportunity. At last, 20 years after it was fashionable, a SWOT analysis is actually giving you some benefit. So that's about us, folks. We start to wrap this up. Very important for you. Some of these markets that are expanding, the intraday risk is massive. If they're too big for you, the risk is outside your trading parameter, use the average trading range. Never risk more than 1.5 times ATR on your risk management, particularly so if you're in equities at the moment. Some of these intraday moves are absolutely massive, and you should be following all of these approaches, particularly if you want to be a serious trader. You should consider doing the Danielcode tutorial. More of that right here. We've been doing it by video now for the last 3 years, I guess, 2.5 years at least, and it's been marvelous. It's been a wonderful way to teach, and of course we videotape all of the tutorial sessions. They go onto our secure server. You're the only person who has access to it. You have a link and a password. You can access those tutorial recordings as often as you like and whenever you like. So there we are. So here we are. If you haven't already, folks, you're welcome to have a free trial. Simply go to the Danielcode, www.thedanielcode.com, and any issues there, contact Terry at support@thedanielcode.com. If you've previously had a free trial, the website will probably remember you and may not want to let you in. If that happens, simply contact Terry, support@thedanielcode.com, and he'll sort it out very promptly for you. Remember, the business of trading futures and Forex is not to be right. The business of trading is making money. And that's what I show you as well at these webinars. So that's our disclosure statement, folks, our disclaimer. You should read it. You should take it to heart. It's very, very easy to lose money trading unless you're a good trader. Once you've become a good trader, it's very, very easy to make a whole lot of money trading leverage derivatives, by which I mean primarily futures and Forex. I got a question here from Ben, who's a tutorial guy. If we get a failure of a buy signal and we enter the trade short with a trailing stop, and then we get stopped out on the trailing stop, do we go to the JCN method? Just to clarify, if you get a failure, Ben, of a DC trade signal, time signal, or TO3 or TO3 plus, the market is basically reverting back to trend. And the vast majority of times, it's increasing the trend. It's turbocharging the trend. So at that stage, your trade would be with the trend. So you wouldn't be using your trailing stop. You'd be using your normal Danielcode stop loss protocol because you're with the trend. So you're using the trailing stop when you're against the apparent trend, your signal that you're back with the major trend. You're using a 1 or 2 bar stop, as I've explained to you. If you want any more on that, Greg, shoot me Ben, I should say, shoot me an email, and happy to set up a go-to-meeting session to chat with you. So that's us for the moment, folks. Thank you so much for being with us. Murph's enjoyed it. I hope this has really shown you the joys of being diversified, of looking at other markets, of being open to the new experience. They're all the experience of making money, so there should be something you're grabbing with both hands, and that's grand. So that's about me for this week so far. I do hope you have a great weekend. And Gig, incidentally, Hank's with us. Gig's with us here from North Carolina. Mate, there's a question on forum for you. You don't have to answer it if you don't want to, but your post on forum elicited an inquiry from John L. from Coffs Harbour, one of our good Danielcode members. Hope you're well, mate. I hope the golfing's great. Incidentally, Ben, who's just done a tutorial with me, he's a retired professional golfer, and he doesn't live far away from you. And he just sent me a text saying, tell Gig, let's play golf. I'll be happy to give you both each other's name because I know, Gig, you're a absolute golf tragic and loves his golf. Gig does. Very, very good at it. And good golfers, well, Gig gives you the whole blast here, Ben. Golfers are good traders, says Gig. It's exactly the same. The discipline of trading is actually the same as the discipline of golf. You've got to learn to hit the same shot all the time. So, you'll see good golfers, they'll get a bucket of balls and they'll be hitting them with the same club. And they're actually not trying to get as close as they can to the pin in particular. What they're trying to do is show that they're hitting the same shot. So they're trying to group those balls all together. Wonderful thing. Yeah, Gig, expect anything. If you two guys would like to get in touch, that's Ben and Gig. Just shoot me an email and I'll be happy to let you make contact with each other and have a game of golf. I know you both love that. All the best, folks. Lovely to have you with us. And Greg says, yeah, consistently is the key in golf and trading. Absolutely right. You've got to learn to hit the same shot all the time in golf with the same club. And then your different club gives you the different results, but you're still basically hitting the same shot. And in trading, that's what you're trying to do. Not be panicked by news, not be flustered by someone else's analysis. Simply put your trade on, handle your risk management exactly the same every day. Consistency is everything in golf and in trading. Okay, so that's it, guys. Rolf down in Melbourne, great to have you with us, mate. I'm sorry I haven't replied to your email. I will. I've been giving it a lot of thought. And Greg said, and confidence in your swing. Thanks. Have a great morning, I guess, Gig. Yeah, thank you, mate. It's just gone morning here in the beautiful Gold Coast, Queensland. It's 25 minutes to 1. And have a great weekend. That was it. I'm becoming dyslexic with middle age. Middle age, indeed. What do you think of that? Yes. Enjoy, my friends. Lovely to have you all with us. It's really a great privilege for me to be able to talk to you at these webinars, and I do enjoy them so much. Continue with great trading next week, guys. It's just going to continue to be one wonderful day after another. And that's it for the moment. All the best for now. Bye-bye.